All right, let's talk about index universal life. What kind of questions do you guys have? I'll let you pop into the chat here. For those of you that are looking into index universal life, you need to make sure that it is structured right. We run into this all the time where we've got people that didn't get a policy that was structured correctly. And I want to show you all how that works. So any questions that you guys may have on this, just let me know. But number one, if you're going for max cash accumulation, one of the most important things is making sure that you're paying 7-pay premium. So this is an example of somebody paying $1,000 a month. If you see something like this, and you're going, if you bought a policy and you want to make sure that you max funded your policy correctly, make sure that whatever you're paying monthly or annually into the policy matches your 7-pay premium. So you'll see on this policy, the 7-pay premium is $12,000 per year. That is the IRS maximum for this policy. A person can pay as much as they want into a plan, but you want to make sure that your death benefit is as small as possible, that the IRS will allow you to bring it down to make sure that the smallest amount of your premiums going to cost of insurance max amount to the cash account. So anybody that has purchased a plan and maybe you're confused about whether or not you are max funding your plan, if you want someone to review it, let us know. We're happy to help. We run into multiple policies a week that were not structured correctly. We're happy to help you fix your policy. So some other things, if you purchased a policy and you really liked it for living benefits, I would say you want to make sure that you have a guaranteed lump sum on your living benefits. We run into it a lot where clients purchased a plan where the language says they will pay you up to a certain percentage of your death benefit for qualifying conditions. That up to language is a big problem when you actually have a claim. So you want to make sure that you have a guaranteed lump sum to be sure that whatever you're going to get paid, you know exactly what you're going to get paid. You know what your benefit is. So if you have that up to language, it's really going to be up to the insurance company what your claim is actually worth. And that could be a problem for you if you ever do have a claim. If you purchased an IUL for tax-free income in retirement, it is also, I think, really important that you have a lifetime income rider. The reason for that, the whole advantage of utilizing cash value life insurance for a stream of income in the future is for the tax-free income component. The problem is if you take too much cash out of your policy, you could run into a situation where you run out of money in your policy. If you run out of money in your policy cancels, and then you would owe back taxes on any of the gains inside of your policy. That could obviously be really expensive for you. So if you plan on utilizing an index universal life policy for tax-free income in retirement, you want to be sure that you have a lifetime income rider. This will guarantee you that whenever you start your income, it'd be guaranteed for life. So like as an example, in this example I'm showing you here, this person putting in $1,000 a month. By the time they're 60, hypothetically, they could have somewhere around just under $600,000 inside of their policy. If that were the case and they wanted to take their guaranteed lifetime income at that time, it'd be a little over $3,000 a month tax-free guaranteed for life, and their policy would never cancel. That way you never have to worry about paying those back taxes later on in life. All right, Rish, you asked, what is this? So this is index universal life. If you're not sure what it is, a lot of people utilize cash value life insurance for tax-free, the tax advantages. They get the death benefit if something were to happen to them. Their family's covered. And then if they have living benefits. So if they become sick or disabled, there'd be a benefit that is payable to the client or the insured if they have that specific illness. Then when hopefully none of that happens, they're going to get a tax-free stream of income later on in life when they retire. Has anybody in this chat, has anybody purchased an IUL, or is anybody looking into index universal life? If any of you are looking into life insurance for tax-free income in retirement, index universal life can be beneficial. Just make sure that you get with the appropriate broker or agent or agency that has experience and knows how to put together a plan. We run into a lot of these plans that are not structured appropriately. So be sure, if you do plan to purchase one, that your plan is structured correctly. Make sure that if it's for max cash accumulation, you are paying your 7-pay premium. Yeah, does anybody have any questions on this? I see, what is it, Masor? Do you have questions? This is Index Universal Life. I'm assuming it's something that you aren't looking into, but what it is it's a form of life insurance that also builds cash value that you can access, again, tax free. So a lot of people look into this for the death benefit that would be payable to their beneficiaries, but then also a lot of them like to max fund up to the IRS limits. So it's based on IRS code section 7702. They can max fund these accounts that they can then access these funds later on. The extra cash that you're putting into the account is going to participate in portions of the upswing of the market. When the market goes up, you lock in your gains. Market goes down, you don't lose anything. People like it for accessing the funds tax free. So, as an example, it's life insurance. So, it's not an investment, but people use it as a savings vehicle. So, you've got the death benefit. We can max fund it to the IRS limits. There's also living benefits that will pay out if you have certain illnesses or sicknesses, it would pay to you. But on top of that, it's a savings vehicle. So it has a lifetime income rider that you can turn on at any time after being at least 50 years old and owning the policy for at least 10 years. And it would pay you a stream of tax-free income at that time for the rest of your life. You can also use it for banking purposes. So these are hypothetical growth examples here. I'm going to try to zoom in a little bit more. So we've got a 4.4% assumed rate of return and a 5.97% assumed rate of return. So this right-hand side is going to be based on, say, the market indexes. It's going to be more of a conservative example of how those funds could grow. And what you're going to notice is a net death benefit column, an account value, and a cash surrender value. So your death benefit is what's payable to your beneficiaries if you pass away. You'll notice that does start to increase in the future as time goes on, as your cash gets too big in the account. The account value is what is receiving interest credits in the future. The cash surrender value is what you'd walk away with if you were to cancel your policy in the early years. So these all do have a surrender charge period of at least 10 years. This is an example of a policy with a 10-year surrender charge period. So you'll notice in the early years, if you wanted to cancel your policy, you don't walk away with your account balance. You would walk away with your surrender balance. Those numbers get closer to each other each year. Once you get to year 11, you'll notice those numbers equal each other. So if you did decide to just cancel it completely, you could walk away with all of the funds. But you can also access these funds tax-free as well whenever you'd like to. So some people use this more as like their own little savings account that they access tax-free. Some people want to just let it grow and use it more for retirement as tax-free income. But there's a lot of different ways that you can utilize these. Yeah, I mean, what we'll do here, we'll put a link out that anybody that would be interested in learning more, you can certainly go ahead and speak with one of our agents and they can design out a plan for you. So just posted my booking link there. But anyway, what kind of questions do people have on this? Does anybody own a policy? If you do own a policy, I'd say that you definitely want to get it reviewed. We run into lots of cases every single week that have not been structured appropriately. And so another way that a person can structure this is they structure it more for death benefit, which that is fine if that's what you actually want. But we run into a lot of policies where the client wanted this for max cash accumulation. And unfortunately, the agent structured it more for death benefit because agents get paid more if the death benefits are higher. You want to be sure that you are max funding this. Otherwise, it's going to cost too much of your money in this account balance would be going to cost of insurance, and you won't have as much growth potential. How long does it take to get a surrender value paying target premium? Yeah, that's really going to vary based on a person's age and health and everything. But target premium is just going to be a lot less. So, like as an example, target premium's usually like 3 to 4 times less than what it would be to max fund an account. And so you would have 3 to 4 times less surrender value in this example here if you're only paying target premium. But if you're paying the max amount, so the 7-pay premium, that's something that you'll always want to look for if you ever purchase a plan or ever talk to an agent about it. You want to make sure that you are paying 7-pay premium. And if you are, then the smallest amount of your premium is going to go to cost of insurance. So really, if you want max cash accumulation, you just want to design it in this way. If you want more death benefit on top, there are different things we can do. We might layer on a term policy. We might set up a different policy that's not for max cash accumulation, because you can have multiple plans. But if you're going for cash accumulation, there's really not a reason to do anything less than your 7-pay premium. And just posted my link there as well. So anybody that is wanting to book a time to have an agent speak with you and design a plan out for you, we are happy to do that. Feel free to book a time. Anybody else have any other questions? I'd say the most important things is definitely just how it's structured, making sure that it's going for max cash accumulation. It's usually going to be best that you have a mutual carrier versus a publicly traded carrier. At the end of the day, a publicly traded carrier, their duty is to their shareholders. With a mutual carrier, you are the shareholder. So it just gives you better potential for more benefits for yourself in the future. But really, the agent or agency that you go with is going to be the most important. These can take ongoing maintenance. You want to make sure that you're with somebody that has been doing this a while, that will be there for you in the future. I've been in the insurance industry 21 years. We've got agents and advisors across the US. We've specifically been doing this for the last 6 years. So we are here for the long haul to help our clients. And again, another thing that is important, if you do plan on taking it for tax-free income in the future at all, make sure you have an overloan protection rider. Obviously, designing it correctly is important, but make sure that you have an overloan protection rider. Or if you plan on taking consistent income, make sure that you have the lifetime income rider. The reason for that is the only way that your funds will continue to be tax-free is if your policy is still in force. So imagine that you're saving into your policy for 20, 30, 40 years. You start taking distributions in your 60s. Now you get into your 70s and or maybe 80s, and your policy runs out of cash. If that happens, your policy will cancel. If your policy cancels, you owe back taxes on any gains in your policy. An overloan protection rider will help protect you against that. Or if you have a lifetime income rider, which not all carriers have, there's actually few that have an option for a lifetime income rider. Lifetime income rider is just going to guarantee you that stream of income tax-free if you decide to take it. Any other questions? Is there anybody on here that has actually purchased a plan or is looking into purchasing a plan?